Hey there, folks. Greg Shepard here, S&A Financial Services. I specialize in helping folks all over the country in higher education basically just get the most out of their higher ed retirement plan. So today's short video, great news when it comes to TI Traditional. We just got July rates for new money going in, and guess what, folks? They've gone up, okay? Bottom line is they've gone up 1/4% per account. And I'll recite what those new rates are except for the IRA. Okay, the IRA stayed the same, which is very attractive, by the way. Now, before I get into the rates themselves, I'm going. This is not investment advice. I'm not telling you to go out there and get the TI Traditional tomorrow. It can get confusing. There's a lot of nuances, exit strategies. Don't have time to get into all that stuff. But I tell you what, folks, regardless of your age, okay, because a lot of folks getting closer to retirement typically are more conservative. But even those, in your 30s or 40s, ask yourself, does this TI Traditional make sense for a sleeve of your portfolio? Okay. Typically, 30, 40-year-olds aren't investing too heavily in something fixed, but these rates, I tell you what, they're hard. They're getting hard. They're already past hard to ignore. Okay, so let's get right into it. Let me tell you, I'm going to stare off into space here on my screen, so give me a second. Okay, so here we go. We got the RA GRA contracts, synonymous with non-liquidity, 6.5%. Okay, RC contract, 6.75%. SRA, GSRA, more of your liquid contracts, 5.75%. RCP, 6%. That's retirement choice plus, 6%. This is on new money going in, folks, okay? IRAs issued after October of 2010, looking at 5.20%. That one didn't move. All these other contracts went up 1/4%. And I've said this before. I've never, 12, 18 months ago, I never would have said put TI Traditional inside an IRA. I've changed my tune on that. It could, I'm not telling you to do that, okay? But it could pose a good opportunity for IRAs as well. And you have that liquidity issue there. So again, I'll reiterate, I'm not telling you this is not investment advice, but I think with rates the way they are, and folks, these rates are competing. The level at to which we are now, the rates are competing to the peak that we saw back in November of 2022. Now, where are these rates going to go? Where are these rates going to go here in the future? I have no idea, but there is a correlation to the Fed funds rate, okay? So the Fed raised rates in June, paused in July. Odds are they're going to do it one or two more times before the end of the year, okay? We don't know that for certain, and then going to plateau or pause for a certain amount of time. So take that for what it's worth. We're probably closer to the end than we are at the beginning. I think it's safe to say of these rate hikes in that TI Traditional going north. Folks, don't quote me on this. I'm going to say we're 1/10% below the peak I've seen in maybe the last 20 years. Okay, hopefully I said that correctly. You probably get the gist. We're at high levels. If you want to go over your situation, see if it makes sense for you, but also remember, be careful if you've never dealt with TI Traditional, be careful prior to going into TI Traditional because you got liquidity issues. You need to have an exit strategy prior to going in. And also, there's different strategies, the reinvestment strategy, as I call it. There's different strategies you can implement to take advantage of these higher rates. Going from an old contract that's liquid into these new rates. Same contract, but new rates, okay? I don't have time to get into all the nuances of these strategies. I just wanted to let you all know the new rates. If you're interested in some of this stuff, by all means, contact me. Folks do it all the time. Not a big deal. Okay, folks, Greg Shepard here, S&A Financial Services. Hey, go out and have a good one. All right, take care. Bye-bye.